Ladies and gentlemen, welcome to another live stream on this unprecedented, most historic day on the financial markets, live at 11 p.m. here in the most vibrant, oil-rich city from the Middle East, from Dubai. Let me know two things, guys: where you are watching from and your questions to this absolutely insane day. Like I was thinking, like just going into that I need this typical YouTube thumbnail, this shocking face, which is like, or because it's absolutely insane. I will go in every single detail in this live stream that you need to know, and it will be so much fun, guys, because like everyone thought, like, what the hell is going on? What does it mean in negative oil price? What does it mean? Is it going all under? Is the market broken? Myself is broken. What is going on, guys? And everything we will talk about today, so don't worry about it. Just stay tuned. See, even my brain for normally speech is a little bit broken as well. But let's dive into it. I see already almost 40 guys in. So the day started also for me as a just normal start into the week. And I saw this beautiful, but very surprisingly, WTI crude price going by the second. First it was minus 20, then it was minus 40, then it was minus 50, then it was minus 80, 90, 93. And then I was thinking, wait a second, where all this is going? And then, as the day moved forward on CNBC, breaking news, the futures of oil is going negative on minus 115. What the hell is going on? And then we have, I think, this is the picture that you can show your grandchildren, because they will never believe that we went minus 300% into price for oil, okay? And this is absolutely insane. It doesn't matter how long you are on the stock market, nobody have seen something even similar, so you can be happy to be alive on those times. This is absolutely insane. The overall market is a little bit in the turmoil as well because of the whole situation with the oil. Therefore, you see the studio in red. And before diving into the questions and also into the procedure, because I will go step by step to understand for you what does it mean for our financial moving forward from here. And I'm just want to know from where you are watching. So we have people here from London, from Sydney, from Seattle, Phoenix, Canada, North Carolina, and Germany. Very, very nice. Czech Republic as well, sorry. So all over the world, everybody wants to know what's going on with the oil. Okay, so there's two factors to that. First, let's start with the very simple one. So imagine that oil is not a stock that is like a virtual trading item that people trade for a specific price and represents the part of a physical company and its patents and its warehouse and its items, everything what is there. But if you're looking into oil, we have really a physical asset that people are buying or selling. And what happened over the last couple of weeks was very simple. As you might have, if you are not living under a stone, then you might know that the oil price is going down because of two reasons. First, there was a little bit, tension between Russia and Saudi Arabia, because both of those countries want to push out other competition out of the oil market, and they can afford to put the price lower. So therefore, there was a little bit turmoil about that. But in the very, very simple matter, it is really that the oil price is down because there's no demand, okay? Nobody is flying, people are driving much less, people are staying at home, people are not using oil for generation of products that's much, and so on and so on. So there's like a whole chain that there's no demand for this product, okay? So this drives the price down. And to show the price, or to represent the price on the market, there are futures. Futures are contracts that represent that people have the right to purchase a product or an asset for a certain price. Let's say that you want to buy a bottle of water, okay? So you think that the prices for water is a little bit high, and therefore you are buying this future that you can, or let's say, let's make it with oil. I think this is pretty good. So people are thinking, hey, I want to buy a future contract, which is the right but not the obligation to buy the physical asset oil to a certain price. So in this future, people agree that they want to exchange, this 1 barrel of oil for, let's say, $100. So this happens every single second. Most of this, it's done in Chicago. There's a big future trading floor, but in general, this is happening every single second. And this is also papers that can be traded on the financial markets, and people see, okay, this is, people agreed on this price for the oil. Now, this is the second part. The first part was the demand crash. The second part is that people are trading the prices. And now the third part, this is that actually those prices are gonna to, actualize every single day, but toward ends of the months, or the expiry date for the next month, which is tomorrow, for those futures, we see that people, see, okay, I still have this future contract. I need to get rid of that, because otherwise I'm, if this will be executed, I need to purchase oil for that price. And what happened then is that overall, all three things combined led to the thing that people are starting to sell these futures, yeah, right? The people start to, hey, I don't want to own this future, I want to sell it, and more people wanted to sell it, and therefore we saw slowly but surely it's going down and going down and going down. Now you're thinking like, how it's possible that oil is going negative? Now, again, back to the part that we are talking about the physical asset, it's that you have to store it, you have to take it, right? You have to transport it, and people or companies behind those manufacturing processes are going to have costs. If they don't move and produce this oil and stop the production, there's a huge cost for them. So therefore they continue to produce oil, and therefore try to get rid of the oil, but nobody want to buy it, right? We are in May, or we are trading futures for the next months, and then we see that people are, hey, I don't want to have oil, so actually it turned out that the producers have to give you money that you take the oil. And if you're looking in those pictures here, this is very important here. For example, here you see that the VTI, the US crude, US oil was at this moment at minus 137%, and then you see the oil prices, or the oil future prices, are actually for June $21, for July $27, for August $29, and September $30. So those are actually the current, let's say, prices for oil. However, you know, nobody wants to take, because there's also no space to take those May deliveries, and therefore, you know, we went in such a crash dramatically. But this is the mechanics. I think this is pretty clear and very easy to understand. So people trade this futures, but what today happened was very, very unusual, and people say this was not normal. So there could be other options. So beside there is the theory number one, which says, hey, there's just not people want to take this oil, and therefore it's dropping more and more because people want to get rid of this oil, and therefore it's collapse and collapse. But there's also the second theory that maybe because the futures expired and people need to get rid of those futures because otherwise they are buying real oil, you see that actually maybe a huge hedge fund saw that, oh no, oil prices are going down for May, and the futures are going down. We need to get rid of all our futures that expire now tomorrow before we get really crashed and buy basically by this future contracts the oil, right? So maybe we have seen that a huge hedge fund that was actually betting on getting more and more oil prices, that really just started to sell this oil contracts into the market and maybe even busted on that. Maybe they said, wow, we cannot, you know, afford that, we lost so much, and just busted and dumped everything on the market towards the end. Because you have also seen it started with minus 15%, then it went to 50%, then to 100, 150, and then in the last minutes of all the trading for the day for the futures, we have seen minus 300, right? So the picture for your granddaughter right here, right now. So I think you know, if this was not crazy, the printing of the money, I think, you know, this is in the same league. You know, this is so crazy that I cannot even, you know, comprehend this. I'm really excited what will happen tomorrow, because there's a couple of options. So either the oil is going more down, like a lavine of snow, or we see that we get a huge pump up, which I would love to see, because I invested a little bit in oil today, obviously, because I said, wow, this is the risk, as I always preach on this channel. So maybe you'll subscribe and ring the bell, and also give me a huge thumb up if you like it so far. And also I explained it well for you to comprehend this absolutely futures market is absolutely totally complicated, but I think, you know, by explaining it a little bit, I think you got it, and it's super interesting because it's never done, you know, it's absolutely insane. And therefore, you know, I believe that I believe that the risk that the oil can go more down is much less than we see a proper gain of the oil price again. Because think about it, what is happening currently on the market, right? Or on the government side. Let's talk about governments. So governments want to reopen as soon as possible, so people have to go to work as soon as possible, so people will able to travel as soon as possible. Companies need logistics, so air freight and so on. So everything is picking up slowly, so we could see further going up into the oil prices. And this is what I hope, this is what I'm currently a little bit trading on. It's a very small trade, but still I could not resist, you know, this is unprecedented times. I went a little bit too early because I didn't if someone would tell me that we will see minus 300 oil price futures, I would say you are insane. Maybe I would react as follows. Okay, so you are telling me 300 minus for the oil price, right? So I absolutely, I would never. It's something like comparable. I think that someone would tell me tomorrow Tesla will be at 10,000. It's such crazy. It's so crazy that it's absolutely crazy. Yeah, so absolutely crazy right now is also your engagement. I'm going into the comments, I promise you, but I want to also give you something that is very important. The stock market and the oil market is, like brothers and sisters. And think about it as the following. Think about it. What happens if the oil is cheap? If the oil is cheap, then companies can thrive and go up and so on. So we usually see that if the oil price is low and the market is low because everything is in a downturn maybe, or something in a big event like this happening, and then everything is down, and then companies and people can spend more because they don't have to pay so much for gasoline, and they make a trip or two more, and this is like a chain reaction. And now if the prices going up, stocks, companies get better, oil prices get better because there's more and more demand by making products out of this. Oil is not only transportation, not only your car, not only the kerosene for your airplane, but also plastic products, medicine. Many things are used to produce by oil. Unfortunately, because it's not so unsustainable product, but however, we going there to be more sustainable in the future with Tesla. Therefore, I think it's I don't think Elon Musk danced like that today, because also think about it, little oil prices also not so good for electric cars. But however, so this is important, and therefore I think important is also this graphic here. So here you see how correlated actually oil and the S&P really are. You see here the oil and the S&P, it's going like hand in hand, as I said, but just in a couple of days and weeks, you see that actually the S&P went up and oil went down, and therefore I believe that it's absolutely crazy. It's so correlated, but it's absolutely crazy. But this is why we love the stock market, right? This is why we do financials, not only because it's making us money, but also because it's fun, especially those timings. Those timings come every 10 years, every 12 years. So I'm super excited. Let's go into your comments right now. Let me just have a hydrated piece of water. Okay, so what we have here. So let me see. So people are thinking I'm nuts because I'm buying oil. Think about it, investing is always to know the negative, the risk, right? So how much risk is there that oil go even more down? We need oil, unfortunately, now still so intense on our daily lives. And also think about it, Trump bought a lot of oil from the market when it dropped, and now it's almost negative and very low in oil prices. We have seen the prices for oil will be, or are realistically now, like $20 per barrel, and this is very cheap compared to a couple of years ago. And therefore there's still place for the strategic reserves for the US and other governments. So I think governments will buy up those numbers. And also there's something more interesting, which I will dive into the second, some little bit about the mechanics of the markets, because each of these futures represent $1,000, 1,000 pieces of barrels. So this is quite interesting. So we dive into it, what means actually minus 300 or minus $35 per barrel. So, someone say buy by dollar. Countries who need all the time should buy a lot. We have people from Poland there. Very nice. Then we have people from UK. Very, very nice. Then questions. I think the explanation was very good because this is not so much questions here, but will this collapse other markets? You know, this is something that it's a good question actually. As you can see, the it's pressure on the stock market as well. But I think, you know, it's just something like this, like a flash crash. If it's just this one day, happens a lot during a lifetime of an investor. You know, we had this flash crashes because of more and more technicals are in the markets. You have to understand there's also much computers, algorithms are working on that. So you know, more and more of our trading gets digitalized, and therefore I believe that, you know, things like this happen because of machines. You know, AI is real, guys, and also on the stock market. Then I Larson is asking, what oil stocks did you buy? I actually didn't buy stocks of oil because I think this is very dangerous. Lots and lots of companies will go bankrupt, especially in the US. They, you know, a lot of them doing fracking, which is just profitable, I think around $45 or something. So you can see that a lot of companies will get busted by that. And I think the government needs to help there. Otherwise, you know, the Texas Cowboys will have really bad time, you know. Why this price discrepancies between various blends? This is also interesting. You know, there is basically it really depends. So first of all, there are different blends. I think this is something general. So you have the WTI. This is, for example, the US crude oil. Then you have the Brent. This is the European one. Then you have, you know, Middle East one, and so on. So actually, the market, or the US market at least, looks for what's happening in the US, right? Because US need to store it, they don't have that much production, like for example in very big exporters, Saudi or Russia. You know, those are countries that are just trying to export. Actually, now on the way there's a big tanker to the US with hundreds of millions of barrels. This is absolutely insane, and therefore, you know, these things are driving the markets down every single second. But you know, those are so the WTI is the most affected by today because first of all, they are highly traded on the future market, and second, you know, US is very heavily affected because the US companies cannot produce it so easily like Saudi Arabia or Russia, which have a huge reserves of oils, and you know, can produce this on a much more competitive reason, right? Or prices there, and therefore, you know, you see a couple of changes between those. So actually I want to also give you a little bit of let me see, where is this graphic where I think it's this one. No, it's this one. So if you are looking into graphic of the day, right? So 300 negative into WTI crude. Then you have to imagine that one future contract represent 1,000 barrels of oil. Okay, so this means now if you have one future contract of this WTI, this means that someone would pay you 1,000 times minus 35. So someone would pay you $35,000 to store 1,000 barrels of oil. Now this is, or to buy, right? If you store it, then this is another thing, because this is a problem for the oil, obviously, because you cannot easily store it, or you cannot, destroy it or get rid of it. It's oil, right? So it's very problematic. If it's not sold, it's staying in your warehouse, and it's taking lots of space. And therefore, I believe that this is very important to know as well, that, it's an asset that is really, really important to sell, because otherwise, you cannot get rid of it. But you can see that people are willing, and on paper, to get $35,000 if you store 1,000 barrels of oil. So this is the current situation that we are in. I hope you like this episode, and I see you tomorrow, because I'm vlogging every day, I'm making live streams every day, and if you liked it, make sure to thumb up this live stream so more and more people can watch it, and I see you tomorrow. Thank you very much, and don't get too much oily tonight, right? Okay.